Okay, let me break this down. Imagine waking up to a world where central banks, car companies, and even presidents' bank accounts are all tangled in this chaotic financial web. That's today's episode. Let's start with the elephant in the room, the Federal Reserve. Everyone's Kevin Warsh like a hawk waiting to see if he'll hike rates. But here's the twist, markets expect no change, yet traders are still sweating over his presser. Why? Because this isn't just about numbers, it's about power plays. Trump's been publicly bashing Fed members as political, which, honestly, is like a circus act. The irony? He praises Warsh while slamming others. What's the subtext here? It's a reminder that monetary policy isn't some sterile math problem, it's a chess game where politicians and bankers are both players and pawns. And when Trump threatens Iran, sending oil prices soaring, the Fed's job gets even messier. Geopolitics and economics colliding? That's the new normal. Now, Ford's earnings. A 5% stock jump sounds great, but dig deeper. Aluminum supply fires? Revenue missing estimates? This isn't a comeback story, it's a survival manual. Ford's F-Series recovery plan is like watching a boxer get knocked down but refusing to stay on the mat. But let's ask, why are we still shocked when supply chains implode? Isn't this the 10th time in 5 years some unforeseen disaster hit manufacturing? Ford's CFO basically said, "We adapt, but that's not a strategy, it's a PR line." The real question is, how long can legacy automakers like Ford keep limping along while EV startups eat their lunch? Then there's Trump's $850 million portfolio. JP Morgan, Schwab, UBS, these banks are holding his cash. And experts say this creates a unique position given his policy power. Unique? That's code for massive conflict of interest. Imagine if Biden's portfolio was managed by Goldman Sachs. The outrage would be deafening. But with Trump, it's just shrugged off. Why? Because we've normalized the absurd. The White House claims no conflicts, but come on, when you're shaping banking regulations, your personal accounts aren't some footnote. This isn't about Trump alone, it's a symptom of a system where power and money are inseparable. The scary part? We're so desensitized we barely blink. Apple's leasing iPhones for $18 a month? Genius move or predatory trap? On one hand, it's democratizing tech access. On the other, it's a subscription to perpetual upgrades, lock people into paying forever. And while Apple's hitting $5 trillion, let's not forget, their China sales are a ticking time bomb. If Tim Cook's exit call doesn't address this, it's like ignoring a fire in your basement while redecorating the living room. But hey, at least they're innovating, right? Or is this just financialization of gadgets? Buy now, pay later for your ego? Finally, Nike's collapse in China. 8 straight quarters of declining sales. What's the body count? They've gone from dominating to being irrelevant to young shoppers. Domestic brands like Li Ning are eating their lunch. Why? Because Nike's been asleep at the wheel. They confused global brand with cultural relevance. Meanwhile, local brands are flexing authenticity and nationalism. Nike's problem isn't just marketing, it's identity. They're the Gap of sneakers now. And if they don't wake up, they'll be the next Reebok, a relic in a museum of has-beens. So what ties this all together? Power, survival, and the illusion of control. Whether it's the Fed juggling politics, Ford's factory fires, Trump's bank accounts, Apple's lease-to-own hustle, or Nike's identity crisis, the thread is clear: adapt or die. But here's the kicker: in 2026, adapt just means surviving long enough to get bailed out by the next crisis. What's your take? Drop a comment, let's dissect this circus together.